All right. I want to thank everyone for coming out to the Capital Raising Strategy session. Today, we are, do we have a guest speaker? I think we open guest today. I mean, just open
Open
open today.
networking. Yeah.
Open networking today. Okay. So we just gonna be open networking today. Um, I would like to know Neil Shah, is it Shaha? Neil Shaha?
Hi. Hi, how
Hey,
are
how
you?
you doing?
Good, how are you?
All right, just want to welcome you to the Capital Raising Strategy session and say thank you for coming out.
Thank you, thank you. Thank you for having me.
All right. All right. So Stephen and Alicia, Stephen was asking some excellent questions. If I want to continue, go
Kind of
ahead.
recap it.
Yeah. Or I'm gonna pass the mic on over to Jim.
Yeah.
Well, I think first thing I would like to come back to the conversation because I think there's a very important component to the line of questioning where it was going, which is I think where Steve's going is, okay, there are folks that are predicting that we're going to have a very severe recession and that it could be as bad or worse than 2008, 2009. And if that's the case, how would this uh, property make it? And I think that's a very important question for everyone to be asking for all deals that they're looking at right now and potentially looking to get into. I, for one, am not in that camp where I think we're going to have that kind of a recession, but I do think there's a lot of factors that will go into what happens on the world stage politically that could absolutely put us into something like that. But having said that, I think where we're more likely to be is rates are going to be about what they are for the next 18 months. I'm not expecting any decreases, and I'm hoping that there's not going to be any increases. I think that most people are predicting there might be one, two, or even three decreases. But I personally, I don't see that happening. And I think if there's anything people should have learned in the last 2 years is don't model for the economy being better. Model for where you are. And, there's been different times of my 66 years where you're buying sometimes because things are appreciating so fast, that you're having to build in some blue sky and in order to win a deal. It's just as much as people want to say you don't buy for appreciation, that's in a hot market, that's the only way you're ever going to own something. And but in a down market and in most markets, if it doesn't cash flow the day you buy it, it's probably not going to cash flow. And that's the attitude you should take. You should have cash flow day one just to survive if the worst does happen. But so we'll get back to that. What I'd like to do though is I don't know Neil. So Neil, if you would introduce yourself to the group.
Sorry. Oh, sorry, hi. Yeah, my name is Neil Shahi. I'm based in Houston. And sorry, my camera is not working right now. I've done some land development before, working on a couple of hotel deals right now.
Neil, we lost you. Are you still there?
Yes, I'm here. Sorry.
So how long have you been in the business, Neil, and how did you get in it?
So close to about 5 years. I knew people who were doing it. I partnered with them initially for doing the land deals. Same thing, I did LP investment in other hotel deals, and now we are doing our own. Now we're sponsoring the hotel deals. We're doing a portfolio of a Holiday Inn and a Hilton Home2 Suites, which we are buying as a portfolio. They are adjacent to each other, pretty close to the medical center and the NRG Park in Houston. So we are going through the due diligence and the brand negotiations. One of them we have to convert from a Holiday Inn to a Hampton Inn. So there's a lot of work involved. One hotel is a heavier lift than the other, but we are doing both of them together.
So rest of the crowd here want to ask Neil any additional questions to get to know him a little bit better.
Yeah, Neil, you said that you're in the hotel space.
Yes, ma'am.
So have you done any ground up hotels?
Not ground up. So these are what I would call value add projects, because a lot of hotels throughout the pandemic, people did not upgrade and they did not keep up with brand standards, or they were not managed right or neglected. So all that work has to be done. And plus, I used to work for Marriott. I know the hospitality space. I like that space, so that's why.
So with your hospitality spaces in keeping with the hotel, have you ever done property that has hotel on it and then some other retail on it as well?
No. I do have a partner though for these projects, and he's a second generation hotelier and has about 15 hotels. So that's whom I partnered with. It's a slightly different animal than a lot of other, I guess, commercial real estate verticals, because revenue management is a very big piece of this, very dynamic pricing, where you are changing pricing multiple times in a day. And you are leasing one night at a time. Think of it like that. So marketing becomes very key. How you market it, how you go after group sales, contract sales, how you do reputation management, all those things become very key. Customer service focus is prime. I mean, absolutely, you have to be on top of it. It's all about customer service. So it's slightly different. It's not just real estate. It's a very big operating business that is together with real estate.
Awesome. So when you take over a project like that, do you all already have your own property management companies, or have you created an entity within your partnership that you all manage your own properties through a system?
Yes, so we have our own entity for doing the hotel management for this, for both of these. That way we de-risk the thing a lot, instead of depending on third parties. And we have tried those things before. This is in our backyard. We can very easily manage. For something like this, first of all, we as interview and all the employees and see everybody that works out. We assume all the employees, and then we put our own GM over there, general manager.
That's awesome. You said keyword, it's right in your backyard. So
Yes.
if there's some issues, you can get to it pretty quickly. When
Yes.
you say your backyard, is that within an hour, or do you have a certain radius of when you look at these properties, these assets?
Yeah, I mean, this one is within half an hour of where I live. But I mean, we are open to it. If something is far away, as long as we put our own managers there, we can manage it. Third party, unless they come very well referenced and proven, for local, it doesn't make sense for us to use third party managers. We can do it ourselves. Out of town, if we are really far off in the northwest of the country and we have no presence there, yes, we can look at third party there.
So how do you find your managers? Do you go through where managers are members of, or like the traditional hiring systems like Indeed, LinkedIn, those types of systems?
So for something like this, we want to go with people we already know. and they have proven other places, we hesitate to hire somebody brand new whom we don't even know unless they come with good references. Because that is the key. I mean, you put a multi-million-dollar business in the hands of somebody and you don't know, that's kind of risky. So we try to
Right.
de-risk as much as possible.
So are you referring to the general managers when you say that?
Yes,
Or the regulars? Okay. So the GMs, you have your GMs kind of recycle them. They manage multiple assets for you. Okay. And then the working staff, those are ones that they and their team hire the traditional way.
so in this case, what we'll do is we'll assume all the employees that are already there in both these hotels, and these are very employee-intensive businesses, about 40 employees. Interview them all, everybody who wants to come, we bring them forward with us.
That's cool. So how do you go about raising capital when you see a property, and I'm assuming you all underwrite? Do you underwrite those deals?
Yes, we do.
Okay.
We
So
underwrite these deals, and we do it conservatively. A lot of times, there are a lot of things we can do to optimize the revenue. For example, these properties are adjacent to each other, so we'll share the same general manager across both these properties. So we can leverage that, so we don't have to hire a separate GM for each hotel. So there are a lot of things like this we do that can help with optimizing the revenue. Even employees, because they are adjacent, we can share employees back and forth, front desk, housekeeping, whatever the need is across hotels. And accounting wise, we can always go ahead and later on split which charge codes to use to charge the right hotel.
So do you have your own maintenance teams as well that
Yes.
are okay? Okay.
So,
And then
so all,
they go
all the
back and
basic
forth.
maintenance, the
Uh-huh.
day-to-day, all the emergencies, we should be able to take care of. But if there is something big breaks down, the air conditioning or the boiler, or something big is happening, big plumbing job, then we bring somebody from outside.
And so did you already touch on how you raise capital for?
So capital, yes. So we have raised in the past, we do have a investor database. We reach out to people. People have told us in the past they are looking for nicer hotels, newer hotels, and select service. Select service is the limited service hotels like the Holiday Inn Express or the HomeQ. These are not full service hotels, but these are not economy either. Just the basic breakfast and all that. So these have a good revenue and good net operating income that goes to the bottom line, good percentage. So people like that class, the select service, the limited service class, and because of the cash flow. So we already have commitment from investors who want to join with us.
That's fantastic. Jim, do you have anyone else?
I didn't see what Sonia just,
Oh,
did she just
she
drop a
says-
question in the chat?
Do you only invest in hotel conversions? That came from Sonia.
No, so this is not a conversion. We are not converting into multifamily. We're keeping it as a hotel.
So you
Do you
just take
invest-
making it better. Basically, you taking maybe a Motel 6 and making it a Four Seasons, something like that.
No.
So you do the higher end, the Hilton, Radisson type, those types?
Okay.
You're breaking up, Neil.
No, what I heard from Neil is that they are right in the middle of the road with Hampton Inn and Suites. So they're in that business traveler, maybe, middle of the road, not the high end stuff, and definitely not the low end stuff. And right now, I think that the hotel deals that I have looked at, I'm not typically a hotel investor, but I got a lot of friends that are, and they're telling me that you're able to pick things up at really, really, really good values historically. And so if you're a good operator and this is a place that's just not being operated efficiently, that you can come in and these things get refreshed. I think, Neil, correct me if I'm wrong. If you're one of the franchisees, you have to refresh the property like once every 5 to 7 years and get everything looking brand new again. So it is it's a lot more like a business than it is like buying real estate. You just happen to own a piece of real estate.
That is true. So the hotels, the brands they require you to keep upgrading everything, all the FF&E, the furniture, fixture, and equipment, everything. They have something called a PIP, property improvement plan. They will write something up, and you have to keep doing this every 5 to 7 years. Each brand is different. They have different standards, and you have to comply with their standards.
Yeah. So I think Sonia's question, also what I heard in her question, Neil, is do you only invest in that asset class in hotels? You did mention land development, are you buying land just so you can develop hotels, or is land another asset class in and of itself, and you're doing hotels? And if that's true, are you doing anything else? Are you as an LP?
No, I'm open to other things also. The land development I do separately, that we buy farmland and subdivide and go through all the entitlements. That's mostly in the Austin area. But right now, the market is not very good. We are sitting on a lot of land, and it's difficult to sell because where the interest rates are. So we'll wait that out till the interest rates come down a little bit.
Interesting. So, okay, anyone else have any questions for Neil
Yes,
before we move on?
Yeah, and I only just ask Neil, suppose, because the one thing Jim mentioned was about the economy, but I'm starting to hear a lot that interest rates where they are, they're not really high. When you look at the trends and statistics over the years, actually just about where we should be. If interest rates stay where they are, or maybe come down to say let's just say 1% what would you do with that land?
No, we will sell. I mean, we only buy in locations which are good, which are in the path of progress. So selling is not difficult. We just have to wait till we like the pricing.
So that
Right,
brings up a very interesting follow-up question. Neil, how do you and your team define or not define, how do you find the path of progress? What do you do to say, yes, this is in the path of progress? Here's our 5 indicators that will say that we're buying in the path of progress.
So in Austin, we know just driving around, we know where Tesla is coming, we know where Samsung is building. Anything that is around there, because these companies bring their entire ecosystem. So hundreds of suppliers, vendors, everybody is there, and then you need housing for everybody, right? So that's what we know if we are within half an hour driving distance to each of those areas which are like growing tremendously, we'll be okay.
Yeah. So that's what I call seat of the pants gut investing is, or hillbilly market research is let the big guys do all the market research. If they're going there, then you're going to be safe there also.
Right, and we see all the big builders are also there around. They are gobbling up whatever land they can get. We also look at the city plans over there, the county plans. So we have a fairly good idea, and we are in touch with a lot of brokers, so we know what is going on.
So
market.
have you guys found a way to monitor how many permits are currently under that are active, and also how many have been applied for?
No, we don't monitor at that level.
Okay,
Uh,
okay. Anyone else have a question for Neil? If not, Steve, is there anyone else on the call today that you haven't met? I see Jeannie has been able to join us.
I think
And
I don't know if Jeannie or Richard or I think I've spoken with Rhonda. I think I've got everybody else.
okay, well, then let's
Or I've
go
seen
around.
at least everybody around. The names
Yeah.
ring a bell.
Well, let's go around the horn and we'll start with Richard. If you're able to come on and introduce yourself. Or Rhonda or Jeannie, whoever is ready to come off and can start us off. I see Jeannie is the only one of the three that's actually on camera. So I know Jeannie's ready. So
Okay.
Jeannie, go ahead.
Yeah, just a basic introduction.
Yeah, yeah, and what you're looking for, what you might need.
Okay. Jeannie Allen. I live in Sonoma, California, which is wine country north of San Francisco, right by the Napa Valley. But I don't invest in California. I invest in Texas, with about a bajillion other people. And so we have 5 properties in Texas. 2 of them we are the leads on, one in Dallas, one in Fort Worth. We have really become inserted in the asset management, which we didn't intend to do, but the properties kind of required that we do that. So we've learned way more about asset management than we ever thought we would learn. But we are doing a pivot. One of the most important facets of multifamily is raising the capital. And the last capital raise I did just about killed me. And I'm determined that I will raise capital again and it won't kill me. And in fact, my husband/partner Chip and I are now focusing on raising capital and have signed up with Raise Masters to learn how to properly raise capital. We went to Raise Fest, and that's our focus. So moving forward, we are thinking about putting together a fund of funds, which means that we would be raising money from our investors to put into other people's deals. I don't really anticipate that we will be acquiring, operating properties of our own. We are going to focus on raising capital for other people.
Fantastic. So, Jeannie, who do you not know on the call? I know you missed Neil's introduction. So, Neil, if you could drop your contact information in the chat, your LinkedIn profile, and so people can reach out and get to know you and help you build your investor list and also help them build theirs. And Jeannie, obviously you already know that. If you can drop, everyone should drop your name in the chat so that if anyone doesn't already have you on their list of people they want to get to know, then you have an opportunity on both sides to grow your contact list. So,
Neil, could you do a quick intro for me since I missed you?
Neil, if you want, I'll do a quick recap for you. Neil is in Houston. He's in the hotel business and land development, and has been in the business about 5 years. He's got a partner that's a 3rd-generation hoteler that owns about 14 hotels, and that is their primary focus. He is open to investing in other types of deals and other asset classes, and he has a background in the hotel business, used to work corporate W-2 job with Marriott. But I cannot give you his LinkedIn or his contact phone number. So Neil, you'll have to, if you're still able to hear us, you'll have to drop that in the chat yourself. So Janelle, are you able to introduce yourself?
Hi, I'm at work and I'm jumping
Okay.
into another Zoom, so I'm sneaking.
All right.
But I'm Janelle. I've been on the call a couple of times. I am looking to network and getting to know everyone and to scale my multifamily business. And some of you guys I've already know, some of your names look familiar, and I've met you guys. Jeannie, I know I've spoken to her a couple of times. Hi, Jeannie. I'm glad you're feeling better. You look good. And
Thank you.
and that's what it is. So I'm jumping in the call. I'm sneaking. These calls are during the day, Jim.
I know.
Some of us work, have
Well,
full-time jobs, but
I
but
understand.
I jump on to listen on anyway.
I understand, and we really appreciate it. And Daryl does put these up on the YouTube channel, so you do have an opportunity. But we really appreciate you being here, Janelle.
Thank you. I appreciate you guys.
And I'll also add that Janelle's in the insurance business. I don't know specifically what at such a big area.
Commercial insurance. So if you do need commercial
Commercial
insurance on your
property?
buildings, anything,
Okay.
commercial properties, anything commercial, whatever you guys do commercial, please reach
And-
out. I can help.
And what's the name of your company, Janelle?
It's called Alara Group, and we're underneath Alara Group, but it's FOA and Son International, but we're underneath the large parent company Alara Group.
And you're in
And we
which
also
market?
do international insurance as well. So anything commercial, international, we can handle for you guys.
And you're in which market?
We're in all markets. We have all
No, I mean, where do
markets.
you live?
Oh, I live in Jersey, New Jersey.
Okay,
From New York and just moved to Jersey about a year and a half ago.
got it. And anyone else? So Janelle, we'll try to, if you're not able to, we'll try to find your LinkedIn and post it in the chat for everyone. So
Hey, Jim, can I make a intro also? I know I've been
Absolutely.
a member for a while, but
Yep.
there may be some faces that don't know me. My name is Greg Dion. I am down here in South Florida, nice and warm. I'm one of the managers of the GOB Network Fund, and now soon to be and working to combine to have both B and a C fund combined together, along with Jim, Alicia, Sonia, and Lacey. And so, yeah, we're looking forward to working with different operators to be able to provide that the equity, and also looking forward to working with anyone who's looking for opportunities to be able to work with us as well. We're available. I'm going to post my information here, and you can also reach to any one of us at any time. So thank you.
I'll also add to that, Greg, that if you think you're going down the path to become a fund manager and you're not ready to make the financial commitment to that yet, or if you want to potentially partner on a smaller scale, you don't want to have to commit to raising $500,000 or $1 million. You can come in and potentially work with someone like us that will allow you to be for lack of a better word, to partner in a more temporary status to learn from the inside, and also not feel as much pressure in a capital raise and raise on some of the deals that we're raising on if you like those deals. So it's always an opportunity, and we also do have some partnerships available. If you don't want to have to start from scratch and do all this by yourself and from scratch, we actually have one opening right now for a partner on the B fund. So
Thank you for that. Thank you for that, Jim. That would be of interest to us.
Rich, I think, has his hand raised, so I think he's ready to come in.
Hey Jim, how are you guys doing?
Great. How are you, Richard?
I'm doing well, thank you. I had to jump off when Neil was speaking, and I just had a question for Neil. It sounded like he was buying flag hotels, and I was curious as to what is his experience with buying flagged hotels after maybe like year 5 to 10 of the franchise agreement when they come over to buy it. Does he have to automatically do another PIP, or how he's been handling that portion?
Neil, if you're talking, we cannot hear you. So just a heads up on that.
I think that Neil's in an environment right now where he's got a lot of things going on and may not be able to answer. So,
No, that's fine.
Richard,
Thank
you want to introduce yourself? There's a couple of people on the call in the group that have not met you yet.
Sure. Thank you. I'm Richard Copeland. I'm with R.A. Copeland. We are commercial mortgage brokers. We do financing for commercial and multifamily real estate nationwide, construction, bridge, permanent financing. Got introduced to the GLB by Daryl Murphy, whom I've met a couple of times. And I've just been enjoying finding out a little bit more about you guys and what you guys are doing.
And
Richard?
what part of the country are you from, Richard? Northeast also?
I know, I'm a Southerner, Texas. I'm from Texas,
Houston, Dallas, Austin?
Houston.
Houston. Okay. Fantastic. So anyone have a question for Richard? Richard, did you drop your contact information in the chat?
I will.
Fantastic.
Richard, you forgot to mention one other business
Oh yeah,
that
the
you
other
have.
most important one. I'm also a KW commercial agent here in the Texas market as well.
Got a lot of hats in the ring, so that's good. Multiple streams of income.
Richard, I'm curious. So I'm in the note business, buying mostly delinquent notes. What are you seeing from your commercial side of things with, my understanding is bridge loans are going delinquent more and more right now. These developers can't refinance out of what they're currently in. What's your take? What are you seeing out there from your perspective?
On the multifamily side of it, I've seen more foreclosures. I actually know one guy that has gone through one from that standpoint. For others, they're really trying to make a decision if they want to do pref equity to try to hold on to the deal and see if they can ride out the interest rates from that standpoint. Then others are trying to look to do a little bit more creative, bringing in some mezz debt, things like that, to try to hold on to the property. You just got to get the lender to agree, depending on how it was structured, get them to agree to bringing that subordinate debt. But I've seen some properties starting to go back.
So Richard, put me on your buy list because I'm interested
All right.
for the debt, that is. So if you have notes that need to be sold, I know my team's going to be interested. We've done mostly single family at this point, but I would love to get my hands on bigger and badder, maybe not badder, bigger debt.
Okay. I haven't personally been involved in any other note sales and things like that, but
Okay.
just more so the asset itself. But I will definitely keep you in mind if somebody brings up that point.
Richard, if I may ask, so for these companies who are losing these assets, or who are underwater or stressing the assets, and I know that the banks don't like those under their balance sheets because it doesn't look good. What kind of avenues is available for us if we're able to actually find the right group, find the right loan, and be able to actually acquire those opportunities? How do we get into that?
When it starts going back to the foreclosure, then you start having to jump into the special servicer. Those are guys that typically manage that process, the resale of it, and the taking of it back through receivership. Well, receivership from a judgment standpoint, but it's the special servicers that would be the door. are the doorkeepers.
And babe, I don't know the special services or servicers, and how do you identify them? For example, is it directly with the lending institution, or how do you identify those folks?
It depends. Most of the large banks, they'll try to manage the stuff in-house, but for the vast majority of places, yeah, master servicer, special servicer take over when the property's in trouble. And there are lists out there on the internet you can find. Midland is one. Well, PNC Midland is one of the special servicers that has stuff for sale when it comes back out from that standpoint. And there are a couple others as well. Actually, I'll send you. Give me your email, and I'll send you a list.
Okay, no problem. I'll put it in here for you. Thank you so much, Richard.
You're welcome.
Richard, do you ever get the opportunity to talk to those guys, the specials, the special
Servicers.
special services?
Not directly. You have to find somebody inside the company, and sometimes it's easier done said than done. But on occasion, I know a couple people that could say, "Hey, you need to talk to this person over here, or talk to that person over there."
Hmm. Thank you.
You're welcome.
And if you have, maybe I'm wrong, Daryl, does CoStar have a report that you can print out that indicates loans that are that are in trouble or have already gone to a servicer?
It has a
Jim, you just
report.
reminded me.
Oh, go ahead, Richard.
So Jim just reminded me of a thing. TREP puts out a list on the CMBS side. They have a watch list of special service. If I remember, they have special services listed on there as well.
Yeah, and it seems to me that I seen a post recently that was very generic. It did not have, things like a specific list of properties, but it did, it was a higher overview of how many properties are in trouble and stuff like that. But yeah, there are several different ways of getting in, and I know there are lists out there. I'm just not aware of who they are. I thought there was a searchable part of CoStar. Now that would primarily only get you larger properties. If you're interested in secondary, tertiary markets and loans that are in trouble in those, you're going to need a different kind of access. It's not going to be the same kind of people. Like as an example, USDA, I know has someone who is specifically, they're going to be targeting tertiary markets primarily, and they have someone that's dedicated to handling workouts on those loans, but I don't know who it is. And if it's USDA, which is a bad example for me to give you, because even if you know their name, email address, and phone number, you'll never get to talk to them unless you live in the same town and you walk up to them and introduce yourself. They just don't respond.
And Jim, and to answer Jim's question in reference to CoStar, you have to look for those that are on a watch list, and but they just let you know that this particular property is on a watch list, and they don't tell you why, but it does let you know that they're on the watch list, and I think a date.
Yeah.
But
so
that's about
you
it.
have to kind of back into the information, but
Yeah.
also looking at low DSCR, which probably automatically puts them on a watch list.
Mhm.
But yeah, those are two different ways that you could, if you have access to CoStar, pull that list for a market that you're interested in, and then you can follow the breadcrumbs, if you will, to find out who's servicing the loan, and find out, okay, who is the special servicer for that particular, whether it's Arbor or CBRE, and you can use LinkedIn to find some of that information. Just look for, I would start with just look for servicers in the banking industry and see where that leads you.
Just want to, Trep actually has the data. It's expensive to get to use it, but it actually has the data. It tells you why what the issues they're having with deals, and they tell you if it's delinquent, if it's delinquent, if it's securitized, if it's on watch list. It actually tells you that, but it's pretty expensive to get.
How expensive?
Last time I talked to a guy at Trep, I think he offered me it was either 3 or 6 months for 18,000.
So like buying access to CoStar or Green Street, something along those lines.
Well, yeah, CoStar actually goes to Trep to get their data, if I remember correctly.
One of their data sources.
Yeah, it's one of the data sources.
Steve, do you have you used them? Or have
Who's
you
that? Who?
Trep?
Trep? No.
All righty. Who else did we miss? That anyone else want to make an introduction? Or anyone here that you don't know that you want to meet? So go ahead, Greg.
No, like I said, Rhonda. I've heard your name before, and I'm wondering if we'd spoken before. So that's all. Just curious about.
I'm on the road driving, so
Okay.
but yeah, definitely we've spoken. We used to be in Aaron's room.
Oh, okay. Yes. Yes.
Haven't-
All right.
Yeah.
Guys, it's been a while.
Haven't
Yes,
spoken to
it's a
Aaron
while.
in a while. Is he still doing
Yeah.
this weekly?
No,
No?
No,
no.
Fantastic. So Alicia, since Rhonda's driving, I'll ask you, is this your partner, Rhonda?
Yes.
Okay. So
This is my partner, Rhonda. She's in the Bay Area of California. She does a lot of work with the veterans, heavily invests in the vets. She also has a large project. Oh shoot, I was about to say Riverside, Rhonda. I'm trying to remember which city. It starts with an R, but it's in California.
Richmond.
Richmond. Thank you.
Yeah.
A large development project in Richmond that she's working on for the vets. And it's a phenomenal project. Rhonda, are you still raising capital for that one? You're on mute.
Yeah. We are for the RV project, but not so much for this project,
The
for
Richmond.
the one we're doing with our veterans. Not like that. We are raising money, but it's sort of different, I guess I could say it that
Right.
way.
It's more
Yeah,
grant oriented.
it is, and then there's tax credits involved, and then there's other HUD money. So yeah, so we have not looked at it in a way of investors, not like the RV project.
Right. And we spoke very briefly before you got on regarding the RV project. And I know that Stephen had some questions regarding parts of the project. So Jim, is it okay to, okay.
Yeah. We got a few more minutes. We can go back to the original line of questioning that we started with.
So quick recap. We were speaking about the ground up development. It's a Crosby Luxury Lakeside RV Resort that we have. We have purchased the property in Crosby, Texas, very close to Lake Houston, right off the 90 highway, 99 slabs. These are oversized slabs that are there. And we also mentioned that the park essentially can operate less than 40% in order to get the returns needed to, pay the mortgage and have more for the investors' dividends. So
The break
Stephen,
even. It's a
break
break
even.
even point.
Right.
30, it's
Right.
actually 30%.
30%. And then Stephen had the question of, with the economy and the interest rates being where they are, you know, how can we operate in questions along that nature. So Stephen, did you have any additional questions?
When do you guys, what's your time frame look like in terms of breaking ground, and then, you know, you mentioned you have to get to 40% occupancy to be at break even. When
30.
what 30%?
Yes.
Okay. So like what's the time frame look like? When do you think you'll be at that 30%?
So we expect to be above the 30% before the park opens. So how the progress is expected to work, how everything's outlined, and we've worked with the engineers. Once everything's built and before it's finished, we're going to pre-lease. So the pre-leasing is going to occur prior to that, the open date time frame. And given what's happening in that particular market, the majority of the parks are operating at anywhere between 80 to 100%.
And how's your place compare to theirs?
Ours is luxury. There's one other luxury park that's in that market. Out of, I think there was about 5 or 6 that we really took a deep dive in. In that market, that luxury park does not have all of the amenities that we have, but it is considered luxury. It has a clubhouse and some other things that it offers. But I think on that luxury park, it does not have the slabs that we have. We have oversized ones. So with ours, you can bring the RV, but you can also park your vehicle on that slab, because many people will park their RV and then drive around town with their regular vehicle. And we're within 15 minutes from the major area of Crosby, where there's a lot of national retailers that are there.
30,
And
40,
do you have
40
someone on your
minutes from Houston.
do you have someone on your team with experience in the RV industry?
Yeah, Na has experience in the RV industry. She's doing another project that is ground up, where I believe they've broken ground as well. So this would be the second development that she's doing. And then Rhonda mentioned that it's about 40 minutes from Houston, Crosby, Texas.
Okay, yep. Gotcha.
So we'd be pulling from that population from Houston all the way down to, I don't know why today I'm having such a tough time with these cities. Baytown,
Yes.
that's what
yes.
it is. So pulling
And
from,
also, let me mention too, Alicia, to the gentleman, our population that we're going to be serving, the majority are going to be from the refineries. We'll tap
Mhm.
into the refineries. Of course, there will be families that come and travel, but the refinery, the contractors use RV parks. And we believe that this park will be favorable to them because it's new, one thing, and then it does have quite more amenities than any of the parks in the area.
right. And the true backup to those refinery workers is that it's a destination location. You know, when you see some of these sites for the hotels that have like these parks with the slides and some of those other amenities, this park will have the lake with the sporting activities. And in addition to the clubhouse, inside of the clubhouse, you'll be able to rent space. So those people that, especially the younger population, that work remotely and they travel in their RVs to do work, we're going to have, you know, the printers, the office space that they need to host meetings.
Nice.
So we have the showers, a game room area, those types of things, and on-site management as well.
And to Stephen, for anyone else who would like to have an opportunity to be a part of this, and you don't have the $50,000 to invest, then check out the GOB fund, because we can get you into this asset for $10K minimum. So, and we have other properties online too. So just go to gobfund.com, I think it is, right, Alicia? gobfund.com.
Yes.
And you can be part of this for 10,000K. So, and I know that I've sent both Janelle and Janine some information too regarding this. Well, I sent you guys the Rise 48 deal, but still, just check out the fund, because all of our properties can be invested with 10,000K, and you can come in through the GOB fund.
Any other questions out there? We have like 4 minutes.
I got one announcement. I just dropped in the chat a list of special servicers that I have from like 2015. This is a start. Some of them have changed names. Some of them have gone out of business or gotten out of the business. Others have merged, but it's a start if you're trying to find special services and find deals and stuff like that.
Great value add, Richard. Thanks for that. Everyone, if you don't know how to save the chat, in the chat window at the very bottom, there are a bunch of little things to click on. The 3 dots, ellipsis, I think they call those, are where you can save the chat. Another way to save the chat is hit Control-All and paste it into a document. So a couple of different ways to save that information so that you make sure and get that information in your CRM. Okay, just want to remind everyone, if you're interested in being part of an all-women's investing group, we have Sonia and Alicia that head up the GOB Inc. And they do have a monthly meetup and are very active on the Slack channel also. So it gives you an opportunity to get in that community, and hopefully, if you're not there already, feel free to reach out to them, either via the LinkedIn page or somewhere out on the interwebs. And every other Tuesday morning, we have an underwriting session that Daryl heads up, and you can find that also. Daryl's always putting it out there on the interwebs and advertising it on LinkedIn and Facebook and Instagram. So should be able to find it relatively easily. And what else am I missing, guys?
We have our Arizona group that meets the 3rd Tuesdays.
There you go. I missed
in
that
the evening at 6 p.m. Pacific Standard Time.
Fantastic.
All of those links are in the chat, including Daryl's.
And if I will also mention, if you are still in the early stages of raising capital, and if you are a member of the GOB network, and if you'd be interested in starting your own monthly meetup in your town, reach out to us and we could help you get that started. You can build an authority platform. All right. And with that, we will end right on time. Thank you, everyone, for coming. We hope you had some insights and gained some value here. And we look forward to seeing you again next week, and bring a friend.
Thank you all. Thank you for coming.
Bye.
All right.